CEO at Abra. We have a lot to cover, so let's get to it. All right, so first, a couple of really cool announcements. First of all, we've got Apple Pay on Abra now. So we're super excited that you can now do Apple Pay purchases of crypto via abra.com. That's something that we plan to bring to the app itself in the coming weeks. We're testing it now via our website. So if you go to abra.com, works best via your iPhone. So if you just bring your iPhone to abra.com, click on buy crypto, buy Bitcoin with credit card rather, you'll be able to use your debit card and some credit cards. And the process is super simple, right? All you do is go to the Abra app, generate a deposit address for the crypto that you want to use. You go to abra.com and you simply click on the buy button, and it'll let you choose one of about 20 or so different cryptocurrencies, and it'll immediately just process the purchase via your debit card, and it literally takes about 60 seconds. It took me about 60 seconds to onboard the first time I tried it. And just as a reminder, if you're in the US, it's definitely cheaper to buy crypto using your bank account in the Abra app. But if you don't have bank access or don't want to use your bank account directly, then debit card-based purchases are often a great alternative for many people. Okay, so try it out and let me know what you think. All right, so now I want to talk about some of the interesting things that we're seeing here in the crypto space. A lot of people have been asking me why I don't talk about some of the other coins that we have on Abra, and I just wanted to spend a few minutes talking about the ones that I follow, and then in the questions, if there's specific tokens you want to talk about, please list your questions, and we'll try our best to get to all of them today. So the first I want to mention, of course, is XRP, and we've seen huge investments from the team at Ripple into creating an XRP ecosystem with a particular emphasis on remittances, right? We always heard about how cryptocurrency was kind of the second coming of money transfer and how it was going to solve all the problems related to money transfer. We're certainly not there yet, but with companies like, I want to give a shout out to Bitso in Mexico, and of course MoneyGram. They actually have migrated a big part of their business to be XRP based to process remittances and money transfer. And I believe Bitso has mentioned that a significant percentage of US to Mexico remittances is now coming through their platform. And I think this is a pretty exciting development. So congrats to the Ripple team on that. And of course I would be remiss if I didn't mention Litecoin, LTC. I love Litecoin for a few different reasons, but the most important reason is I see Litecoin as a phenomenal testbed for all of the new crypto technologies, right? If you want to see where Bitcoin is going in the next few years, look at Litecoin now, right? So Litecoin and sometimes Bitcoin Cash or Monero are my go-to cryptos for small dollar person-to-person money transfers. The fees are always low, right? Wallets are pervasive. Any wallet that supports Bitcoin almost invariably supports Litecoin, and I trust the underlying technology because it's basically a fork of Bitcoin plus a whole bunch of new features that Bitcoin will eventually get. And if I receive payments in Litecoin, I can easily use Abra to convert it back to Bitcoin if I want, or convert Bitcoin to Litecoin in order to send money if the Bitcoin fees are too high, because Bitcoin is obviously being optimized as digital gold, not necessarily a money transfer mechanism for small dollar transactions. So then I want to mention ADA or Cardano. The Shelly upgrade is now mostly complete. We're waiting at Abra for our trading partner Bittrex to finish the Shelly upgrade, and then we'll bring that to you. I'm super excited about it. I think it's got a lot of promise, and it's a very advanced smart contract platform, and we'll see where it goes, right? I mean, obviously the promise of Ethereum 2.0 is huge. Their expectations are huge, but I think the competition is fantastic. I think Charles and team have just done an incredible job with this platform, and I'm excited to see where it goes in the coming weeks. Okay, so now that brings us, of course, to Stellar. We love Stellar. I hold some Lumens, not a lot, but I hold some. And Stellar is probably the most underrated platform out there for new token creation, right? It's so easy to create a new token with Stellar. I put a link in the blog list, the newsletter this week, to show you how easy it is. It's almost scary how easy it is to create a new token on Stellar. And Abra is going to be using Stellar and Lumens in certain future services that I look forward to being able to talk about in the coming months. Okay, so go try to create a token on Stellar platform and get a feel for how easy it is. I talked recently in more detail about Link. I'm not going to spend a huge amount of time on it now. I think, as I've said before, it's a super interesting project that I think is trying to solve one of these missing links in DeFi, which is the need for real-world data. In crypto, we refer to those as smart contract oracles. That's just a fancy way of saying, how do I get data from the real world into the digital world? And I liken it like the hard line into the matrix. You've heard me use that analogy many, many times. Okay. And of course, there's always Bitcoin. Every crypto project thinks they're going to be the next Bitcoin. That's not going to happen. All right. We'll end up with lots of interesting cryptos, but there still can only be one true Bitcoin. It has the network effects. It has the proven technology. Has the huge and growing liquidity, which all points to a thriving ecosystem and long-term future for the king of cryptocurrencies. And Bitcoin will be our first $1 trillion digital asset. Mark my words. Okay, so on the horizon, now I wrote this before the Uni token release. Obviously, the world has gone Uniswap crazy in the last 36 hours. It's unbelievable what happened there, and hopefully we'll be able to bring you the Uni token globally sometime in the near future. It's getting harder and harder to keep up with all of these crazy DeFi projects. But Sushi and Uniswap in general and DeFi in general are super interesting to me, as I mentioned in the past. I have some concerns in the short term that I mentioned last week. You can go read last week's newsletter to get a feel for that. Ethereum is a big problem right now, right? So, Ethereum gas fees are skyrocketing. Yesterday, I think a lot of that was due to the Uni launch, the Uni protocol token launch, and it really caused a big problem in the entire Ethereum ecosystem. Gas fees skyrocketed. There was huge wait times for transactions to be processed on the Ethereum network. And as I said last week, 2.0 cannot come fast enough. There is no way DeFi is going to work at the kind of scale and interest that we're seeing unless we fix Ethereum. Okay, so now I get this question every single week without fail. What is my what about my favorite crypto project, right? What about this token? What about that token? As I said, it's getting harder and harder to keep up with the pace of token protocol innovations. I think the implication is we're going to see more and more specialization of expertise in the crypto space. Certainly in the trading area, a lot of people from the traditional commodities world, derivative trading world, have made a really fantastic niche for themselves in crypto. You're seeing expertise in the remittance area. We're seeing expertise in things like at the protocol level around smart contracts and oracles. And all of this different specialization is creating a new kind of banking stack that I think makes crypto the future of banking. And all of these different players have an important role to play in that. And so, we just want all of you to join us in that. Okay, so I want to talk about asset allocation in a moment, but before I get there, we put out a kind of a call, a request for feedback from the community, and we did it in the form of a little bit of a contest, right? This was a test for us. We've never done anything like that before, but we actually announced that we're going to give away $200 to somebody who would give us great feedback on how to make this show better. And I'm really excited that we got a tremendous amount of feedback, and I'm going to talk about that feedback today and hope to leverage that in the next few weeks. But shout out to our winner from this week, Gabriel Miranda. Gabriel, I don't know where you're from. If you want to tell us in the chat session here where you're from, but we'll be reaching out to you on Twitter to follow up to get you your $200 of crypto. Gabriel mentioned it would be great to cover how protected a user's investment is against security risks and uncertainties in the market, and what kind of updates are being made to Abra to make it safer a safer experience to the user. Okay, let me talk about this question first, and then I'll talk about some of the other great feedback that we got. So, when you make an investment in crypto, right, you are taking obviously principal risk, no different than if you buy a stock, if you buy Apple shares, or if you buy gold. If the price of gold goes down, if the price of Apple goes down, you're obviously taking losses. If the price goes up, which is what we all want, then obviously you're getting gains. And so your investment from a capital preservation perspective is completely tied to whatever you invest in, no different than any other investment. Okay. Now, in terms of security risks, right, we hear all the time about, for example, Ethereum Classic. Because of the way that fork was done a few years ago, Ethereum Classic is basically very centralized in terms of how the mining works versus traditional Ethereum now and Bitcoin and other cryptos. And it was subject to a 51% attack, which means it's possible to create double spend transactions, which is a big problem. And so what we need over time is we need cryptocurrency assets to become more and more decentralized. That's one risk that I see. And the second, I think, is technology complexity. And I've talked about this in relation to Bitcoin. The Bitcoin technology is incredible. The fact that we have this asset that's 11 years old that really hasn't been hacked. It had some forks in the early days to address some technology issues, but this is going back 9, almost 10 years ago. And since then, it really has just worked. Now, we as a community and the developer community is making the Bitcoin platform more and more complex in order to address scalability and other issues around eventually token fungibility, which we've talked about in the past. That is a risk. And so we need to go very slow with the adoption of those technologies, which is, again, mentioning Litecoin. One of the reasons that I really like Litecoin and other cryptos is we want those assets to test these new technologies first before we bring them to Bitcoin. And I think that approach will continue to make Bitcoin the most secure, the most trusted asset out there. And the last part was, what kind of updates are being made to Abra to make it a safer experience for the user? So I want to mention a couple of things about how Abra works here that I think are very unique to Abra. So here's my Abra app. By the way, we're streaming on Instagram today as well. That's a new platform for us. So we've got Twitter, we've got Facebook / Periscope, we've got YouTube, and now we've got Instagram. So to make it a little bit easier to see the app, I'm just going to show the app right now, and so you won't see me. But when you start the Abra app, and I'm going to get out of the app and restart it again. So when I start the Abra app and bring up my demo app here, and I'll type in my PIN code, what is actually happening when I type in my PIN code? You have a private key, a cryptographic key on your phone that nobody else in the world has access to. That PIN code unlocks the private key and authenticates you into the Abra application and the back end for accessing your interest-bearing accounts and your trading accounts. I have no access to that key. Abra has no access to that key. You make a backup of that key yourself when you go into the wallet security screen, right? And you basically type in view recovery phrase and you write it down. Okay, so I'm going to go back to the menu here. And that combined with something like Face ID. So let's say you're using an iPhone like I have here, and I'll get out of my iPhone. Well, I'm not going to power it off because it'll make the demo go away. But if you use Face ID combined with that PIN code with the private key, I believe that is the most secure authentication mechanism for an online mobile wallet anywhere in the world. I'm not aware of an app that is more secure of that is actually online. Now, obviously, cold storage is way more secure because no one has access. The difference, of course, is when you're in cold storage, you can't use the funds. So if you want to trade or if you want to earn interest by making those cryptos available online, I believe Abra has the most secure way to do that I've ever seen. And I've been doing this for a long time, okay? So thanks for the question. In terms of making it more secure, we get a lot of requests for things like 2FA, via apps like Authy or Google Authenticator. We are looking at that. In some ways, it's overkill given what I described, but people have asked for it, so we're taking a look at it. And I can't say exactly when we would do it, but those are things that we're looking at and we are interested in. Okay, so let me go back to finish some of my comments here, and then I want to talk about some of the other questions. We've got a bunch of questions about DeFi. We've got a bunch of comments this morning about other tokens and how Abra works. So I want to get to those. But one of the key questions, and I think this really tees up the rest of this conversation, take a breath here, is asset allocation in crypto. And this is a hard topic because everyone looks at asset allocation and risk differently. I have my own way of looking at risk. I'm sure all of you do as well. And I just want to give you my perspective. And I give this disclaimer every week. I'm not in the business of giving investment advice, neither is my team. But we have our opinions as to what we should do as it relates to crypto investing, and we're happy to share that with you. It doesn't mean you shouldn't do your own homework. It means the opposite. You should do your own homework. But in terms of how I think about asset allocation in crypto, 10% of my assets go into Bitcoin, a little bit of Ethereum, in an Abra interest account. Boom, done. I keep saying it every week. My favorite push notifications are those messages I get on Monday morning showing my interest payments in my Bitcoin, Ethereum, and my stablecoin US dollar accounts. I play on occasion with a certain amount of altcoins. I go in and out. I'm not a long-term holder of any altcoins. I'll buy some, I'll trade a little bit, I'll come out. A lot of times it's what projects I'm interested in. It forces me to dig in. So lately I've been looking like everyone else at DeFi. I've looked at projects like Cardano, and I'm interested in smart contracts. So I've looked at Chainlink and /Link. And so I'll come in and out of those projects. That's for me personally. Some people just trade as pure speculation. They wait for what we call an altcoin season, and they try to be smart about tracking the price movements. That's perfectly fine as well. And we have people who are long-term holders of different altcoins for different reasons, and that's fine as well. So I'm also holding about 15% in my Abra interest account, and I'm always adding a little bit more. The Abra team has done a phenomenal job of spreading the risk around in terms of creating a good, high-quality, stable return. As a matter of fact, we raised interest rates last night, on Bitcoin and Ethereum. We're now paying 4.5% on crypto deposits, and still paying a very good, steady 10%, which is awesome, on US dollar deposits. And we have not lowered rates at all since we launched the interest service. We're in 8 figures of deposits into the interest-bearing accounts in dollars. That is fantastic. The service didn't even exist 2 months ago, and it is booming. And so we're getting lots of new deposits every single day. It is the fastest growing part of the Abra ecosystem now. Our trading service is doing quite well, but deposits into the interest accounts are also doing fantastic. And then I have 70% of my stuff in just traditional assets, whether it's a combination of cash or stocks or whatever I may be doing, other high yield investments at that time. That's totally for me personally, and I'll work with a third-party wealth manager, just like all of you should if you have a reasonable amount of money. I make no difference, in my own opinion, as to whether you're investing $1,000 or $1 million. I really think, or even $100 for that matter, starting early to understand asset allocation, meaning how do I divvy up my different investments, is really important, because as your money grows, you want to have a consistent mental thought process and not be driven by just the whims of the market, right? What you don't want to do is say, oh, I'm going to triple my money, my entire net worth, by putting it all in this DeFi token. Don't do that, right? Be smart. Understand the difference between a small amount of let it ride money and your primary net worth, your savings, and what your risk profile is, and read, right? I read a lot. Get some help. Ask questions here. Ask questions on Twitter. There's so many places to go and debate and try to create an educated opinion for yourself. Do your homework and invest wisely. Okay, as I said, we've raised the rates. Super excited about that. As I mentioned, we had a whole bunch more online questions via our giveaway. So congrats to Gabriel on that. So let me just talk about some of the other pieces of feedback we got. Interestingly enough, and I'm not surprised, you don't want to just hear from me. I don't want to just hear from me. A bunch of you have asked for other guests, and there are people that we know because I've either been on their show or they've been on their show in the past. I've been on their show in the past, or they've been here on Abra Money Talks or our Money 3.0 podcast in the past. And so we are going to try to bring on different guests. Um, a bunch of you asked for Pomp in particular. You like the back and forth between Pomp and I. I've always done his show. I think I've got the record for being on his show 3 times. I'm going to try to get him to come over here and talk about, he's had some pretty awesome guests. I listened to Jim Cramer on his show last week, and his personal story was pretty interesting if you're interested in trading. But I'll try to get Pomp on here and see if we can reciprocate. I had some requests to talk more about stablecoins. So, for example, about the Reserve protocol. Lots of requests to talk about specific protocol projects or token projects with the founder of those projects. For example, Charles from Cardano, Mike from Verus, and Charlie from Litecoin, et cetera, et cetera. So we're going to try to reserve some time over the next few weeks to get more of an outside perspective. One, I don't have to hear myself talk all the time. Two, and more importantly, you don't have to hear myself talk all the time, and we can get a better, different perspective. The other thing the other question we got, I thought, which was really interesting, was this whole idea of network transaction fees, not only for Bitcoin, but for Ethereum and other cryptos. Let me talk about that for a minute, because I think it's going to be a big problem going forward. And when I say a big problem, I mean that a lot of people don't understand what a network transaction fee is, and so when they get surprised by this fee, they're like, well, hey, where did that come from, and why didn't I know about this before? And the truth is, it's always been there. It's just that the fee is often very, very low, so you don't really pay attention to it. But yesterday, for example, as I mentioned, related to this Uniswap or Uni token protocol token launch, Ethereum fees skyrocketed to the point where people were waiting for hours for their transaction to settle. Now, that's not because of Abra, it's not because of any one exchange, it's because of congestion in the Ethereum network itself, because any given blockchain can only process, if it uses the traditional proof of work model based upon a traditional blockchain, it can only process so many transactions per second on a net basis based upon the size of the blocks. A Bitcoin transaction is created and processed by filling blocks of information. So think of it like you're moving to a new house and you have a bunch of boxes, right? How many books can I take with me? Well, if I only give you so many boxes, in theory, you can only carry so many books, right? A blockchain is like one of those boxes. I can only put so many books in the box. I can only put so many transactions in a block. That limits the number of transactions that can be processed over time. So if you got millions of transactions waiting and there's only so many boxes to put the books in, there's only so many transactions that can be processed. How do we decide which transactions go in the blocks? How do we decide which books to put in the boxes, to continue the analogy? Well, it's based upon how much you're willing to pay to have your transaction processed. The more you're willing to pay in general, the higher the chance that your transaction is going to get processed. This is a fee that's paid to the miner, so it's often referred to as a mining fee. Colloquially, it's more likely to be called a network fee. And these network fees, as I said yesterday, in the Ethereum world, which are called gas, skyrocketed to the point where we actually had to temporarily turn off withdrawals because our users were having such a bad experience waiting, and they were blaming Abra when Abra had nothing to do with it. Abra is just publishing to the Ethereum network, and everybody is waiting for their Ethereum transaction there, just like everywhere else. Every other wallet and every other exchange suffered the same issue, and it died down a little bit once the euphoria around Uni kind of leveled off, and we turned the withdrawals back on, and people had a reasonably good experience, but the fees are still very high. And as I said, 2.0 can't come fast enough, but even then, we're probably talking about a year before we really have proof of stake at scale, and it's actually impacting transactions just because of the way Ethereum is going to launch. And by the way, getting Vitalik on was one of the most requested, getting back on, because we've interviewed each other before, but getting him back on the show was one of the most requested interviews that we had. Okay, so let me take a breath here. So what else? Can you discuss the various ways users can and should secure their holdings? This was a very common request when we had the contest about feedback on improving the show. Talk more about security, okay? That and the transaction fees, which I just addressed. So there are myriad ways to store cryptocurrency assets, right? Lots of different ways, actually. There's cold storage. Now, cold storage can be done in different ways. The original way of doing cold storage was you literally printed out a piece of paper with a private key on it and maybe a QR code that could represent your private key, and you could literally put it in a safety deposit box in your home safe, some type of fire retardant place, so that if your house even burned down, you would still have your cryptocurrency key. Now, the biggest risk here should be very obvious to all of you, right? If I'm reliant upon a piece of paper to have my private key access to my Bitcoin and I lose that piece of paper, I am really screwed, because that's it. There's no backup. Some people even took to trying to memorize their private key, and there's two ways to do that. You actually memorize 100 and plus string digit of numbers, which if you can do that, I'm very impressed. I don't think I could. And the second is there's a mnemonic. If you look at the backup, the backup phrase for the Abra wallets, you can basically turn any private key into a string of words, and there's online services that do that for you, that are secure, because the code is actually running not online but on your browser, and so you can memorize those words, which for many people would be easier than memorizing a long string of digits. That works. It's very dangerous. If you die, if you lose your memory, if you forget the words, you're screwed again. Okay, so those are the two most secure ways of doing it: piece of paper and memorizing a string of numbers. I would not recommend that for most people. But then there's things like the hardware wallet. The hardware wallet is usually a little device that you can carry with you, put in a safe, and you can plug that back into a computer and get access to your crypto. And a lot of people like that. And the upside of that is very secure, generally very reliable. Every once in a while there's a security issue with some of these wallets, but generally the 3 or 4 companies that lead that space have done a very good job of creating a secure environment. Okay, now let's go to a combination of kind of extreme online and some kind of like spectrum of security. I would say the least secure place is going to be the traditional exchange, okay? Especially exchanges that don't do 2FA, and exchanges that use SMS, which is the text messaging for authentication. Those have been a disaster, right? Almost all of these security hacks, stolen funds that I've seen online related to crypto have been related to what I call SMS 2FA hacks. What is an SMS 2FA hack? If you get your phone number stolen, and there's a bunch of us that are fairly well known in the crypto space, and people are always trying to attack us. They'll steal your phone number and try to change your password for your cryptocurrency exchange doing that. Do not use an online service that for financial services in particular. Social media is a different deal, but for online services, for financial services, do not use services that use SMS for authentication. It is a disaster waiting to happen. Use services that either have a local private key like Abra, or use services like Authy for authentication, right? And that brings me to traditional wallets like Abra that are particularly mobile focused. Why am I convinced that Abra is the most secure way to keep funds online? 2 reasons, actually 3 reasons. The first is we vet our custody partners very carefully, and a lot of funds that we don't need online, we will put into cold storage. Okay, so that means that even if those well-vetted partners are hacked, the money's not there because some of it is in cold storage. And our partners have not experienced those hacks, and like I said, we continually vet what they're doing. Part 2 is the device itself. Okay, we're very careful about making sure that the way this works uses best practices. And those best practices for us mean there is a private key. When you first install the Abra app on your phone, there is a private key that is generated inside the app, right? And that private key is always going to sit there, and nobody else has access to it but you. And the first time you deposit money in the phone, the app is going to ask you to create a backup for yourself, not for Abra, for yourself, of that private key. And the way you're going to do that is writing down a bunch of words, and that's the mnemonic that I talked about, so that if you get a new phone, delete the Abra app, reinstall the Abra app, get your phone stolen, whatever, you can type in that backup phrase and your key will be recreated. Why is that key so important? Because when you type in your PIN code to get into the Abra app, right, you type in your PIN code here to get into the app, you basically have a very secure authentication mechanism that takes the PIN code and unlocks the app using that private key, to be clear, okay? And so stealing somebody's PIN code and typing it into a new Abra app does absolutely nothing. They have to have that private key to unlock the app, okay? That's why you should keep your backup phrase very secure and not share it with anyone, okay? So there's a spectrum there, again, of security. And let's see, so we got some other interesting comments here. Wow, a lot of questions today, as always. And oh, by the way, if you're on YouTube, I always like to remind people of this. You've really helped me with this. We've gotten great feedback on this. At the bottom of the video screen, make sure you press that subscribe button on the YouTube channel, because that helps us with Google and YouTube to promote Money Talks and promote crypto in general to a broader audience. Okay, so help us with that. Press that subscribe button. And following up on my comments on Cardano, do I have any update as to when Cardano will be, why ADA will be accessible again on the Abra platform? Unfortunately, I don't have an ETA. That is in the hands of Bittrex, who processes custody for Abra. We're waiting for them to finish their 2.0 Shelly upgrade. They have not finished that yet, or they haven't announced that it's finished. And as soon as they do it the same day, we should be able to turn it on and bring it back to you. So I apologize that it's taking too long, but it's a little bit out of our hands. Victor asks, is there a reason that Litecoin doesn't have an interest-paying account? Is it because of demand? Victor, it's not because of demand. We get very high demand, so all I can say right now is stay tuned for that. I don't want to give it away, but you may want to join us maybe next week, for example, on Money Talks. Maybe we'll have a surprise for you there. He also asks, hey, thanks for doing these great shows. And by the way, how safe is the TrueUSD interest accounts? The account is not insured like FDIC. Why is TrueUSD paying a higher rate than Bitcoin? Excellent question, Victor. It's one of the most common questions we get on the interest account. The answer is very simple. It's about demand. When we're paying interest, we're generating interest for you by doing high yield lending agreements with institutional businesses that borrow, usually on a collateralized basis, from Abra. And dollar-based loans pay a much higher interest rate than crypto-based loans. And as I said, the vast majority of the money generated on those interest accounts goes to you. Some goes to Abra, but the vast majority goes to the consumer. It's basically the opposite of what a bank does. Somebody asks whether we allocate any funds to gold or silver assets. We do not. We are not an investor in any type of commodities ourselves at Abra. We do hold a certain amount of Bitcoin and other crypto assets on our balance sheets, but that's all. And nothing in the kind of traditional commodity world. There would be no reason for Abra to do that. Okay, so let me get back to some of the, I want to answer more of your questions, but I'm going to jump a little bit and go back to the questions and comments that came up via the online contest that we ran. Thank you again for doing that. I think we're going to keep doing this. I think in the future you're going to see more giveaways from Abra. We want to give back to you, and if you want to take the time to give us feedback, we'd love to try to give something back to you besides just our great service for doing that. So look forward to more of these giveaways in the future. We talked about transaction fees. What are your predictions on the future of DeFi after the launch of Ethereum 2.0? Excellent question. So as I said, my biggest concern right now with DeFi, I have a lot of concerns, but my biggest concern is Ethereum, right? Because Ethereum is a lot of the issue with scalability and transaction fees. DeFi is generally used via these DEXs or decentralized exchanges where there is no centralized custody. Sounds fantastic in promise. The reality is that those contracts are often, smart contracts are often wrought with bugs. They've created losses, and they're subject to network fees that I explained earlier. Now, if you're using a service like Abra to do an exchange, there is no network fee because you're actually not doing the exchange on chain. Okay, so an off-chain transaction has no network fees until you actually withdraw to an external wallet and do an on-chain transaction. Ethereum 2.0 has the promise to address a lot of those issues, because it should create a massively scalable environment, which should drive down fees, and basically lower the wait time for transactions to be processed to a few seconds. So if services like Uniswap, Abra could, in theory, create a front end to those services, right? I'm not going to promise that that's something that we would do, but it's something that I would love to do. In other words, I could actually say, hey, any token that's available on the Uniswap platform, you can actually trade in Abra, using Abra as a front end, and the money would simply show up in another Abra wallet for the token that you exchanged into. That would be very difficult for us to do today because of the existing problems with Ethereum, right? If you're on a DEX, you can easily see the liquidity and that you're going to wait. Because Abra is a wallet environment, it would be very difficult to see that. But if the environment was trustworthy and scalable, it would be very easy, or relatively easy, for Abra to bring that to you. And so that's actually a really interesting proposition for the combination of CeFi and DeFi when DeFi starts to scale. In other words, a CeFi app like Abra could act as a very simple front end into a more complex DeFi environment. And I think you'll see other companies jump into that as well. Another question we got via the feedback is Abra interested in adding an NFT section into the app for the future? I've talked a lot about NFTs, or non-fungible tokens, on earlier shows and on podcasts. For those of you who don't remember or aren't familiar with the term, NFT stands for non-fungible token. A dollar or a Bitcoin, in theory, is fungible because you can move them between any wallet and they should have the same value. Most traditional tokens or ERC20 tokens are fungible. An NFT is non-fungible, and that would often be referred to as a collectible. A ticket with an assigned seat would be non-fungible because it doesn't have the same seat as another ticket. That would be another example of a non-fungible token. The promise of NFTs is really exciting to me. They have not achieved any kind of scale yet in terms of consumer interest, consumer adoption. Probably the most well-known example was the CryptoKitties, which were raging a few years ago. That obviously died down. Lots of companies in the gaming space, for example, we added the Wax token into Abra last week, are looking at non-fungible tokens as in a business model, and that's really interesting to us. And as the consumer interest starts to meet the promise of the technology, Abra will certainly follow suit and get into that world, but it's very early and probably a little too early for most of our users today. Let's see. How is Abra mitigating the impact risks of adoption of the DeFi protocols to the user funds? Well, as I talked about, Abra is a CeFi service today. We do offer some of the protocols, right? But you are taking a risk when you invest in those protocols, right? So if Chainlink, for example, was to fail as a company, I'm guessing that the protocol token would probably plummet in value. It's a guess on my part, but Abra is not tied to the protocol of Chainlink itself. It simply makes the protocol token available for investment/purchase in our app. So I hope that distinction is crystal clear. And as I said, as these protocols become more tested and we perceive that the risk is being mitigated, we're interested in bringing some of them to you directly in our app. So for example, to do exchanges via a DEX, to use certain Oracle services and things like that. The world is not quite ready for that at huge scale, but as I said, I hope with Ethereum 2.0 and other services, we can get there, okay? Wow, a lot more questions. We're not gonna get to all of them in the next 20 minutes, but let me do my best. So can you talk about Abra and Stellar? Now this comes from the Twitter feed where we had the contest. Can you talk about Abra and Stellar and what is coming with this powerful relationship, creating new payment rails, banking possibilities? Thanks, Bill. Well, thanks for the question. Not sure who asked, but as I've said, we're very excited about our partnership with Stellar. It's something that we're actively working on. I don't have anything to announce yet, but as I've said, I think Stellar is the most underrated platform today for new token creation. It's highly scalable, highly reliable. It doesn't do on-chain virtual machine like smart contract style code execution, which makes it more secure, makes it a little bit more limited in terms of functionality for sure, but it also makes it more secure, similar to Bitcoin, right? One of the reasons Bitcoin is so secure is that its programmability is very limited compared to Ethereum. Ethereum is meant to be what we call a Turing complete virtual machine, meaning in theory the programs can more or less do anything, whereas in Bitcoin and Stellar, the programs that you can run in an asset or a token are very limited. And like I said, that makes those tokens more secure. But Jed and the team at Stellar also designed Stellar and Lumens to be highly scalable, highly reliable. And that's one of the reasons that we chose to partner with the Stellar team, is that as we looked at new token creation to meet our own requirements in the future, we really needed a reliable, scalable platform that we were going to be convinced was going to be here in 5 years, right? So the Stellar Foundation has a strong balance sheet. They're committed to developing and investing in the ecosystem. They've made some really interesting investments similar to like what Ripple has done, and we're excited to be working with them. I'm sorry I'm not giving you more details on the specific product, but we got to save something for the future, okay? So we got an interesting comment about doing a SWOT analysis of the current crypto industry. SWOT, if you're not familiar with it, is kind of a business school, an MBA term: strength, weaknesses, opportunities, right? And so, you know, this is a very long discussion, right? I think that the biggest strength of the crypto industry is the promise of decentralization. Right? What is the promise of decentralization? Well, it started with Bitcoin. Actually, it started probably with the internet and BitTorrent. But the strength of decentralization is that you have a system with no off switch, no nefarious government, no bad actors, no dictator can shut off a decentralized service once it reaches scale. The music industry tried it with BitTorrent, they failed, right? So they ended up going after individual users, which was crazy, not a good way to endear yourself to people. They had some small wins, but by and large, they lost, okay? No one is going to be able to shut off Bitcoin now, in my opinion. Bitcoin is way past the threshold of being able to be shut off or experience a civil or 51% attack. Okay, so that's great. What about the rest of crypto? The vast majority of projects in the crypto space aren't yet sufficiently decentralized to realize the benefit of that strength of true decentralization. We'll get there with a lot of the projects. Some of them won't, but the technologies that are interesting will make their way into Bitcoin and other projects over time. The biggest weakness of these crypto projects, in my opinion, is twofold. One, the cost of decentralization is enormous, right? Bitcoin itself is the most inefficient transaction processing system ever created by man. That's one of the reasons it doesn't scale very well. But it wasn't created to be efficient. It was created to be decentralized. And what we realized over time is decentralization comes at an enormous cost, right? The benefit of decentralization as it relates to Bitcoin is twofold. One, there's no off switch because it's by definition decentralized. Two, right, you can have double spends of the same crypto, right? That's what proof of work does for us, is it basically guarantees that any output in Bitcoin can only be spent once. In other words, your tokens can only be spent once. That was a really hard problem to solve that had never been solved before in a crypto asset, a decentralized crypto asset. And the reason that it was never solved before was because nobody ever thought of using every computer in the world to do things like mining, right? And that's why it's so expensive. That's why decentralization is so expensive. The opportunity, right, is to replace banking with a system that's better. And that's in two parts. Money, meaning governments, and having deflationary assets, combined with banking systems that aren't necessarily all allowed to do fractional reserve banking, meaning they're not allowed to lend money they don't have. And that's an interesting promise in the crypto space. And so, I'll think about writing maybe a more in-depth SWOT analysis of the crypto industry over time, but that's kind of a quick answer, a quick response to your question. What are some, and then the part two of that was, what are the internal and external factors affecting the crypto industry? Well, the biggest challenge with the crypto industry today is that it's run by one, people, but two, there's also a lot of startups that work in the crypto space. Now, the reality is 99% of startups fail, meaning those companies that are created today are almost certainly not going to be here in 5 years, and very few companies break through. So you see companies like Abra, we've been around for 5 years, going on 6, and we're not going anywhere, right? But we're actually the exception. We're not the rule. There are a bunch of companies that you've heard of that have made it in crypto, but there are way more companies that you've never heard of that have died. And so that's an existential risk, because we need well-run, successful businesses to build out that kind of first-generation ecosystem of crypto services to make this crypto available to everyone, right? It's happening slowly. It's been a 10-year ride for many of these companies, but that's almost an existential risk to the future of crypto, right? Bitcoin will be fine either way, because like I said, you don't need an exchange to just hold Bitcoin. You can even use a paper wallet, but that's not enough to build an entire new banking stack, if you will, around Bitcoin. Okay, so we'll talk more about that. I made some notes here for future newsletters, and there's some really good ideas and feedback here. All right, let me get back to some of the questions from today, and we'll jump around and we'll come back to some of the feedback online. And so I got a question here. I recently signed up on Abra to take advantage of the interest-bearing stablecoin account. And should I be skeptical around the USDT stablecoin? When I attempt to exchange it for a different stablecoin, I actually lose some of my money. Because the exchange rate isn't 1-to-1. Okay, so what's going on with the exchange rate? So let me explain something about stablecoins and how stablecoins are managed. The word stablecoin is a very unfortunate phrase. Let me explain why. When a company like Circle creates a USDC token, or when a company like Tether creates a USDT, or Trust Token creates TrueUSD, they're actually minting Ethereum-based tokens with dollars in a bank account, meaning that the value of the dollars being held is always supposed to be equal to the amount and the value of the tokens being created. That's where the phrase stablecoin is meant to come from. They're meant to have a stable value in dollars relative to the amount of money in the bank. The problem comes when you put these on an exchange and start to trade them for each other. Meaning that if I want to trade my Tether for USDC, they actually have a floating exchange rate, just like Bitcoin versus dollars, or Bitcoin versus euros, or even dollar versus euros. So if you trade between Tether and USDC, it's not a 1-to-1 transaction. There's always an underlying exchange rate, right? And that's why we tell people in Abra, when you deposit money from your bank account, you automatically get TUSD. That's our default stablecoin, TrueUSD. So if possible, we do recommend depositing in TrueUSD, because if you wire out, you're going to get a 1-to-1 value. If you deposit in Tether and wire out, you might lose a small amount on the conversion back to TrueUSD. So in that regard, stablecoins aren't really stable, because they fluctuate in value amongst each other. I hope that makes sense. No different than any other two cryptos fluctuating in value amongst each other. And if you look in the Abra app, you can actually see the rate for going between TrueUSD and Tether, or Tether and USDC, or DAI, for example, another stablecoin, or PAX. We support all these coins. The value is very close to 1-to-1, but it is not exactly 1-to-1. And again, that is not something that Abra is trying to make money on. We actually would prefer that all of those coins are stable 1-to-1, but the way the world works is they float in value versus each other, and that float is necessary in order to have a liquid, high volume system, okay? So I hope that helps. We've got a few minutes left. Let me try to jump around here a little bit, try to get to some of the people who answered. We got a bunch of questions that came earlier in the week. I think I've answered some of them. Oh, this is an interesting one. The implications of United States elections to the crypto market. What will be the implication of the US elections in the crypto market? Will the winner of the election matter for crypto? Will the elections finally usher the bull run? So the last part, I couldn't even begin to answer. Will the elections finally usher in the bull run, except to say I don't think that the future of Bitcoin and Ethereum is dependent upon anything to do with the US elections. There may be certain things like the printing of money that might add accelerant to the future of those cryptocurrencies, as I've talked about in the past. But by and large, Bitcoin's going to do what Bitcoin's going to do. As the hardest asset ever created by man, again, the hardness being relative to gold, it's got a fantastic future, right? Ethereum has the promise of the world's computer and the future of banking. If it scales and the 2.0 upgrade does what it's going to do, as fulfills the promise, it's got a fantastic future. I don't think either of those is really very dependent upon the U.S. elections, with a couple of exceptions, right? So now we've got a lot of international participants here, and this is a very U.S.-centric question, but I also believe that the U.S. really represents a superset for the most part of international law. There are some exceptions, like in India, where they're doing crazy things like trying to ban Bitcoin, which is just nutty, and the Supreme Court keeps backing, basically undermining what the government is trying to do and saying, no, you can't ban Bitcoin, but the crazies keep trying to find new ways to do it. So anyway, my point is that this is a US-centric answer that I'm going to give you, but I think a lot of it applies internationally because a lot of international regulators follow the US lead when it comes to things like securities law and money transfer law, often because unfortunately the US is so powerful that it gives the other countries no choice. I think there's two areas in particular that I watch that matter. There's a third, but that matters a little bit less. The first is the SEC rules as they relate to tokenization of assets and cryptocurrencies in general. As it relates to decentralized assets, the SEC has mostly taken a hands-off approach, meaning that if you can prove, there's this process known as the Howey test, where you can basically try to determine whether a crypto asset is a security or not. And if it passes the test, it's not a security, and you basically don't offer it as a way to raise money for your company, but rather just basically issue a token. Generally, you're pretty safe. And I am not a securities lawyer, and as most of you know, I've spent a lot of time with the SEC as it relates to Abra. And so, projects need to do their own homework on this. But I think that, when it comes to truly decentralized assets that are not securities, the SEC really doesn't have much of a role to play. But as it relates to the tokenization of real-world assets, the SEC is taking a very heavy-handed approach. And people need to be well aware that the SEC is not going away. There's dissenting opinion within the SEC on this, and we saw Esther Pierce, who's one of the commissioners, has come out and said, hey, even as a commissioner, I'm telling you, we're taking too much of a heavy-handed approach. That's her opinion. I think it's great that there's dissension because it means that there's more healthy debate and not just people lining up to say, yes, 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 I agree. We need that debate as a society. And maybe, a Democratic, win actually might create more regulation. That is a concern. I don't know. But I can't honestly see the SEC getting even more regulation. The second part is money service business regulation or money transfer. This is kind of an overlap of banking regulation. So if you want to basically provide financial services and you're not a bank, often you kind of come under the auspices of these money transfer or money service business regulations in the U.S., which are similar to e-money regulations in different countries, like in Europe, European markets, or Mexico, or Southeast Asia. A lot of countries have these e-money regulations, and that's in the U.S. MSB regulation. MSB regulation in the U.S. is a disaster. Why is it a disaster? Well, there's 49 states, I believe, that require money transmitter licenses for certain activities, and then there's often federal registration that goes along with it, and then there are separate licenses for things like lending and whatnot. And it's unbelievable how much money startups have to spend to basically act in a compliant way around these services. Now, there's some viable reasons, if you're managing other people's money, why you should have to obey certain societal agreed upon rules. The problem is there's so many different geographies that have their own rules that we have more licenses and not more licenses, but we have more registrations and more rules that we have to follow at Abra than we have employees. And so scaling that is untenable. And so I do worry about more regulatory overreach. Back to your question, I have no idea whether the outcome of the U.S. election will affect that overreach or not. time will tell. But in general, crypto, particularly Bitcoin and Ethereum, are going to do what they're going to do regardless of the election. Okay, let's see. Some more comments. We're going on the hour here, so we're going to wrap this up with a couple of comments. There was a question about Kraken's announcement that they're becoming a bank. Let me talk about that for a second, because I got a couple of questions on that. And then I think I had one or two questions about the app. Let me try to get to all of that before we wrap up. Okay. So Kraken did announce that they're getting a bank charter in Wyoming. Now that's an interesting place, especially those of you outside the U.S. may never even heard of Wyoming. So Wyoming is a U.S. state, Midwest, western states, kind of like cowboy country. Beautiful, known for its Jackson Hole skiing and a bunch of other wonderful topographies. But in particular, they've tried to create a safe haven for startups to operate in the blockchain / cryptocurrency space. They've done this via some interesting regulation, sandboxes and other things. A couple of companies have announced that they're going to take advantage of that sandbox. The first being a company called Avanti, which is a new startup run by Caitlin Long, who I'd love to get on the show at some point, which is creating a de novo or a new bank specific to the blockchain space. And they're trying to create new tokenized assets that she started to just drip information about. We don't know everything about what they're doing. And then the second is this announcement with Kraken of a few days ago, where Kraken is now a fully bank chartered entity based in Wyoming, or they have a new entity based in Wyoming, Kraken Bank or something like that. And Kraken Bank is meant to manage traditional deposits, act as an exchange to traditional fiat, and it's really unclear what value this is going to have versus the way Kraken operates today. It may be easier for them to manage deposits, manage user onboarding, have less dependencies on third-party banks. I don't know if that will manifest itself in a way that's easy for their consumers to see. I have no idea, but it's interesting. Okay, I see Abra as what I call a crypto bank. Now, from a consumer-facing perspective, a crypto bank manages consumer crypto deposits, dollar deposits, eventually other types of investments, maybe stocks. Don't know yet if that's something we're going to do. Things like debit card access to be able to spend, to do money transfer, to get loans, to get high yield interest like the interest-bearing accounts that we have today. Those are all things that fall under the auspices of a crypto bank, using Bitcoin and Stellar and other Ethereum-based technologies in the background to make all those services available. And I think crypto banking is the future of banking. And I think it's a 20-year transition. And those of you early adopters can say, hey, I was one of the first people to get into this in 2018, 19, and 20. Just like I have friends who talked about when we were the only ones on the internet in 1994. Okay, so I don't know if other states are going to follow Wyoming's suit, but the intersection of crypto and banking has been a disaster. And I have friends who wire money into Abra and then get their account investigated for no reason, right? Not just Abra, but any exchange, because banks sees the word crypto and they go nuts. They lose their minds. It's ridiculous, okay? And I can only apologize for that, even though I'm not the representative of the banking industry, to say I wish it wasn't happening, because there's no good reason for it to be happening, right? You have a right to do what you want to do with your money as long as it's safe and legal. And so having more of these safe havens where other companies can get banking licenses and compete with these ridiculous traditional banks is fantastic. So I applaud that, and I hope more states follow Wyoming's lead in that regard. Okay, time will tell. Catherine asks, and I'll follow up with the last two questions here. We'll go a little bit over. So in a sentence or two, what is the difference between DeFi and CeFi? So Catherine, really quick, CeFi is what you do with your traditional bank or with Abra, where you're getting third parties to manage your cryptocurrency, in this case, manage the purchase of your cryptocurrency, and you're trusting a company like Abra with your user experience and also to help manage your crypto. A service like a DeFi service, like a Uniswap, for example, is completely devoid of any centralized service. And so if you're going to swap two tokens in a DeFi model, right, you're not actually trusting anybody in the middle, but you are trusting that the smart contracts that they created, that those services run on, are secure, and reliable. And so you have to audit that code. That's something that you don't necessarily have to do with a CeFi service like Abra. So very quick explanation. We've written about it online if you go look at some of our other newsletters, and we're happy to anyway, happy to talk more about it in the future, but there's lots of stuff we've written about it online, and keep the questions coming as it relates to DeFi versus CeFi, and we're thinking long and hard about how Abra should play in that space, but it's evolving so fast, things are changing so quickly, and just be very careful with the amount of money that you're investing in DeFi if you're doing anything in that space. Again, careful, do your own homework, and be comfortable with the money you're putting at risk. Last question, Mark asks, using Uni as an indicator for bullish or bearish, what does it mean when the 24-hour volume of a token is 4 billion and the coin market cap is 650 million? Mark, that's a great question. When the volume traded is this much more than the underlying market cap, it tells me that it's not just buying euphoria, it's just general trading euphoria, right? Because if you're trading way more than the market cap and the price isn't going up, that means that you've got probably a kind of a reasonable amount of buying, like equal amount of buying and selling, and the order book is fairly balanced. I don't actually have the chart up for what happened with Uni yesterday. I'll take a look at it, but my guess is that it means that you've got a pretty good even distribution of buyers and sellers once it reached kind of its peak value. And I know there was some euphoria when it was first released. It's really crazy. That's I don't think it's a once in a lifetime event, but we're not going to see that very, very often where something explodes like that. Just be very careful, as I said. Okay. Let's see. So we do have some more questions here. We're going on 10:03 Pacific time. I'm going to stop there for today. We will follow up. We have support people answering questions. If we didn't get to your question and it's a support question, follow up to support@abra.com. We'll try to answer a couple more questions here in the chats, but you can also post to the Twitter feed, the Facebook feed. And as again I mentioned, if you're not following Abra on Instagram, you can follow Abra Global on Instagram. We're actually doing a live stream there now, as well as our fourth platform. All right, well, have a great weekend, everyone, and we will see you next week on Money Talks. Take care.